Hello, and welcome to the Argyle CFO Leadership Forum, FP&A Innovation 2024. My name is Nick with Argyle, and it's great to have everyone joining us today. A couple of notes before I turn things over to our esteemed speakers. First, a quick reminder to stop by our sponsors' virtual booths at any time during today's event and for the following week. Our partners are committed to providing you with valuable content and a great overall experience. At any time during today's event, you can visit their virtual booths from the main agenda page, which include complimentary materials, information, and meet and greet opportunities. To ask questions throughout the session, simply type into the Q&A chat, and we will address your questions at the end of the session. Now, without further delay, I would like to introduce our speakers. Rachel Grandovic, Senior Vice President of Finance, UiPath, and Hitesh Ramani, Chief Accounting Officer, UiPath. We're super excited to have Rachel and Hitesh with us for a thought leadership presentation titled Transforming the Finance Function with AI and Automation. Welcome, Rachel and Hitesh. Over to you.
Thank you, Nick. And hello, everyone. We are very happy and excited to share our story on how we are transforming finance function with AI and automation at UiPath. Over the next 30 minutes, Rachel and I will give you some backdrop on our company, UiPath, our business automation platform, and our journey on how we've continued to support our business at its scale over the last 6 to 7 years with automation and automation-first mindset within the finance function. Maybe before we get started, a quick introduction about myself. My name is Hitesh Ramani. I'm a Chief Accounting Officer here at UiPath. Been with the company for 3 years. I lead our global accounting, controllership, internal audit, revenue recognition, and treasury and tax functions. And joining me today, as Nick mentioned, is Rachel Grandovic. Rachel, why don't you go ahead and introduce yourselves?
Yes, thanks, Hitesh. Rachel Grandovic. Also been with UiPath a little over 3 years. I'm Senior Vice President of Finance. My main responsibilities are over our top line reporting functions. So revenue recognition, our ARR team, our sales compensation team on the finance side all report to me, along with technical accounting. And I also lead our global deal desk from a finance perspective as well. So my team is responsible for reviewing deals, working with sales teams, making sure that we're structuring and executing financially sound deals with our customers.
Great. So with that, let's get started. Who is UiPath? Maybe some background on UiPath. UiPath was originally founded in Romania back in 2005, but we were formally established around 2017. Our first product offering was an RPA, which is a robotic process automation. It's a technology solution which uses computer vision and allows business users to automate mundane and repetitive tasks. Having said that, as you can see on the slide, we have experienced significant growth between 2017 through now, from the point where we as a company raised our first funding round as a Series A investment in 2017 to going public around 2021. We've experienced significant growth. Today, starting as a RPA company, now we are a comprehensive AI-powered business automation platform. So what does that mean? Rachel, if you go to the next slide, we have emerged not just as an RPA company, but now we've understood that business users continue to understand and know where they have to go and automate. So we've basically identified 3 different capabilities within our platform. The first one being a discover capability, which includes technologies such as process mining, task mining, communications mining. These technologies allow business users understand how their current processes operate or how their users are performing tasks, so they can go and identify which of those processes or which of those tasks are repetitive in nature, tasks that are relatively simple, which are mundane, which has the highest opportunity of being automated. In addition to that, our core RPA platform itself has emerged further. In past, the robots did not have an ability to think. They would just operate as you instruct them to operate, but we've expanded into additional product offerings, especially intelligent document processing. We have solutions such as document understanding, which allows users to not only read, understand, validate, or interpret structured data, but also unstructured data from documents. For example, in past, a robot would only understand address if it is explicitly called out as an address. But now, without tagging something as an address, a robot can go and read a field and conclude that that field looks like an address, and therefore can go and document or input that field as an address. In addition to that, we've also further evolved. We use the power of Gen AI, mainly in the space of training our specialized models or specialized AI on the back end. And we've expanded into the space of automating Test Suite as part of our Operate pillar, which allows businesses to not only go and implement automations one time, but continue to operate and maintain their automations that are in place. Rachel, if you move to the next slide, please. With that background about UiPath and our business automation platform, let us spend some few minutes talking about how within our finance function, we have continued to lead the automation journey. As you can see on this slide, our business grew over last several years from $150 million revenue to almost $1.2 billion revenues. And we've really experienced this massive growth in last 6 to 7 years. Our customer count went up from 2,000 to almost 10,000 plus customers now. And we, within the finance function, are able to continue to support this business with a static headcount. What do I mean with that? Our headcount has, over the last several years, remained very static, approximately 150 people, mainly within the accounting function on a net basis. We have continued to make sure that our headcount remains static. In fact, after I joined the company, almost at the time of an IPO, the major headcount additions are in the areas of SEC reporting, technical accounting, internal audit, the functions which were really needed for us to operate like as a public company. But the core accounting and the controllership function or the FP&A function, which were already put in place, there the headcount has remained static. And one of the key reasons how we were able to do it is because we've continued to support the business with our digital workforce. So when I go and ask a question today to my internal audit team, how does your org chart look like? It is not just the humans within the internal audit team, but it also is supported by our digital FTEs or the automations or robots, as you call it. So as you see, as the business continued to grow, while we've kept our headcount flat, we've continued to take that extra workload and supported the business with the help of automation or with the help of digital workforce. If you go to the next slide, please, Rachel. So one of the key points that I wanted to highlight before I pass it over to Rachel, who will get into the details on how we have not only implement or incorporated our digital workforce within the finance and accounting function, which has helped us to sustain the business, but also allow us to continue to accelerate our close process. The key point is to make sure that as the business continues to grow, we are ready and we are able to continue to support it without consistently going and asking for additional headcount. So with that, let me turn it over to Rachel.
Sure. Thanks, Hitesh. So how did we achieve all this? Well, in part, with a focus on continually reducing our close time. So this slide highlights a few of the automations we've utilized along this journey that have helped us reduce time spent on the repetitive tasks and focus on really the higher risk areas. So before going public, our close process was around 30 days. And we had automations in place at the time that helped us with some of our most time-consuming tasks. So the low-hanging fruit, if you will, like reconciling payroll records and compiling financial reports that our controlling team could then use for their procedures. But as we continued to evolve, we embraced more complex automation. So we started identifying opportunities to further automate still repetitive tasks, but maybe a little bit more complex ones, and really a focus on how do we compress our close timeline. So for example, we looked at ways to better integrate the many finance systems we were using, or look for ways to employ automation in lieu of system integrations. And we really challenged ourselves to expand beyond procure to pay and those low-hanging fruit areas. So one example is our Cash App automation. So at the time we implemented this, we had over 1,200 incoming receipts each month that had to be matched between our bank statements and our ERP system. And that required a manual process to do the matching, and then of course, manual process to reconcile the discrepancies. With the automation, we had a robot run twice a day, and that robot could pull the data from the bank statements and from the ERP, match the payments automatically, and then just spit out a report with the outliers that could then be investigated. So that is really where we wanted our team focusing, was, the discrepancies and, the outliers that needed investigating. So a process that previously took about 7 minutes per invoice was reduced to seconds. So pretty amazing on that one. Some of the automations we developed previously may now be obsolete because of advances in the finance systems we used. But I think the moral of our story is that we didn't wait for the systems to advance to our needs or try to patchwork integrations together that would require a lot of maintenance. We used our automations to solve our needs in the interim. And then obviously we have automations that solve longer term needs as well, which we'll talk about in a bit. Today, we're working towards a 2-day business close, and we're almost there. Our revenue recognition at UiPath is a bit more complex than your typical software company, and still requires a lot of manual effort to ensure our contracts are accounted for properly in our systems. So our team's spending a lot of time reading contracts, reconciling, reconciling clauses within the contracts and things like that. So that is our next focus, and Hitesh will dive into our current thinking on that process a little bit later. So as you could probably tell from the previous slide and now from this one, it is true that a good majority of our automations are used by our accounting and controlling teams to accelerate our close process. But we have had automations across the finance and accounting function, including internal audit, technical accounting, tax and treasury, and beyond. We have over 360 in total across the function, including within our FP&A function, which I'll discuss in a bit more detail later. So maybe just to highlight a couple of the ones that are maybe not so obvious and are beyond the scope of kind of repetitive tasks or kind of your traditional areas for automation. So I'm going to highlight 2 that are kind of near and dear to my heart because they are ones that my teams have implemented over the last couple years. So as I mentioned, I run the finance side of our deal desk team. And so my team is fielding requests from sales teams for exceptions to our commercial policy or deviations from our standard terms. And as I also mentioned, our revenue recognition is quite complex. So oftentimes these requests require my deal desk team to dig into draft quotes in our Salesforce system, check for data, make sure numbers reconcile, and things like that. And so last year we implemented a bot that for certain types of requests would go into the system, pull out all the information my team needed, did all the necessary matches, and will auto approve requests that meet certain criteria and will kick out requests that don't meet certain criteria so my team can focus on the outliers. So previously my team would spend, 15, 20, 30 minutes reconciling data, making sure dates lined up, all that kind of stuff. And now a bot's doing that. And not only is this saving time for my team, it's also allowing our sales teams to get back to our customers faster. So as long as what they're requesting is compliant, the bot can review it in a minute and get back to the sales team with an approval so they can then go back to the customer. So that one's very exciting and a little bit more outside the box. On the technical accounting side, my technical accounting team is responsible for doing our related party search every quarter. So we do a search of all of our transactions to determine whether we have any with entities identified as related parties in accordance with our SEC regulations and then, of course, US GAAP. And previously that required pulling data from multiple systems, running searches on keywords or key names, and then summarizing that data, figuring out where we had false hits and things like that. So now we have a bot that runs every quarter. It goes into our procurement systems, our quoting systems, our ERP system, and identifies any outliers, kicks back a report to us. So when my team wakes up the next morning, they can just investigate the hits that we get. So again, saving a lot of manual effort, kind of sorting through data. So how do we maintain a focus on automation and this level of digital workforce that you're seeing, over 32% digital workforce? One way is to include these digital heads in our department reviews. So as Hitesh mentioned, when we're doing reviews of our org charts in the finance and accounting department, we're not just reviewing our human heads. We're also asking, how large is this team's digital workforce? What automations do they have now and what are in pipeline? And so it's really it's something that's kind of just second nature to us. It's built into our process. It's built into the way that we review our headcount needs, and just something that's really top of mind for us throughout the year. Okay, so let's dive into some FP&A specific automations we've used over the years. So admittedly, FP&A does not have as many obvious automation opportunities as maybe accounting does, since typically accounting is driven by very defined rules and oftentimes repetitive processes, whereas FP&A's needs may be different from period to period. So FP&A might get a request from someone in the C-suite to do some kind of analysis that's one-off, not necessarily repetitive. And this has required us to really think outside the box a bit when it comes to automation opportunities in this space. So this slide shows 3 of our focus areas for FP&A in recent periods. So first, revenue forecasting. Automation has played a significant role in our revenue forecasting process, especially in our early stages as a public company. At that time, we had data sitting in a bunch of different systems that weren't able to talk to each other efficiently enough for us to seamlessly pull together a revenue forecast in a short amount of time. So we used our unattended bots to pull data from each of our systems, scrub it, consolidate it, and present it in a way that was digestible for our team to then use as a baseline for forecasting. So a lot of time saved, even just on scrubbing the data. The robot ran each day and saved us about 3 hours of manual work. Now, luckily, our systems have evolved and we're able to retire our robot, who we lovingly named Royce, the revenue robot. But it's a great example of what I mentioned earlier, which is not letting system gaps slow you down. So Royce was built in under an hour by a member of our FP&A team and saved hundreds of hours per quarter. It allowed real-time forecasting, it provided confidence in the guidance we were providing, and it freed up time so that our teams could focus on the strategic issues in the pipeline rather than reconciling data. We also use automations in our FP&A space for scenario planning. So a robot can take a baseline scenario or model and run many, many scenarios in minutes, and then summarize the various outcomes and present them in a format that's easily analyzed and in a tailored fashion. So it allows us to easily and quickly respond to those C-suite requests I mentioned earlier, not only quickly, but in a very consistent manner so that the templates and the format is predictable. Finally, we also use our robots to help us with our baseline OpEx and cash forecasting. So we have a bot that goes into our Coupa system, extracts all of our open POs, cleans up the data, and spits out an OpEx and cash baseline forecast that can then be reviewed for areas of risk or discrepancies. So basically, the bot's bringing all of this disparate source data into a coherent forecast, which then enables our team to have productive conversations with the business. So this is also an automation that saves us hundreds of hours per quarter. And while we certainly have a couple of these focus areas in FP&A, we always leave the door open for ad hoc ideas. One thing that continuously impresses me about my colleagues at UiPath is that anytime we're tackling an issue, an inefficiency, a challenge, whatever it may be, one of the first questions asked is, how can we automate this? So it's just something that's really ingrained in our culture, and it's kind of an automation first mindset that we have. But as we challenge ourselves to continuously innovate, we're not only focused on automation. And so I'll turn it back over to Hitesh to talk about some of the other things we're doing at UiPath with a focus on this continual transformation of our finance and accounting team.
Absolutely. Thanks, Rachel. Again, as Rachel mentioned, automation is one way to transform, and this is by no which way it's not a point in time exercise. This is a continuous exercise. Finance leaders have to make sure that they incorporate this concept of automation first mindset within their teams, and it's not easy. I'll give you an example. We are currently going through an ERP implementation as a company. And as part of that process, you have to understand what your current state processes look like before you think about, comparing it to the fit to gap when compared to the new ERP, and understanding how do you deal with the gaps. Do you go and just make customizations in the new ERP, or do you try to figure out and change the process itself? And as part of that process, even before you conclude that you want to do customizations within the ERP, which is going to be very expensive, not only to build the customization upfront, but then continue to maintain it post-implementation, the approach we are trying to apply here is, for example, if there is the multiple layers of approvals, do we absolutely need 3 layers of approvals? For example, if there is a workflow that's designed certain way, do we have to absolutely follow that workflow, or is there a more easier way to do certain things? So first is tackle the process. And second is, once you tackle the process, then the next question becomes, before, if assuming you conclude that that's the process you want, but that process is not supported by the new ERP, then is there an opportunity to build an automation using UiPath? And if the answer is no, if you can't build an automation using UiPath, then the last resort is to go and customize your ERP. The approach we are trying to do is keep the core clean and do the automation around the edge, which is going to be very flexible and easy to maintain for the business versus trying to go and customize within the ERP itself. The next point is making sure, as the technology around us is evolving at a rapid pace, the folks within your own organization are keeping them up to date with AI. For example, at UiPath, every single employee, not just finance and accounting, but every single employee is required to go through AI-based training. Our folks now understand what is a large language model, what's a foundation model, what's a generative AI, and what's a specialized AI. In fact, 6 months ago, if you were to ask me a question as a chief accounting officer, would I be comfortable incorporating AI within my finance and accounting processes? I would have a question, because you see what's in media out there is the response rate provided by the large language model. There is no consistency. The quality is not there. Folks are talking about hallucination effects and whatnot. So from our standpoint, the evolution that's happened in last 6 months, especially training the model specific to your own data set, improved indexation, improved prompt engineering, improved incorporating computer vision within the LLMs, which is basically allowing business users to get a high quality response rate. And on top of it, ability to continue to protect your data set so you're not compromising on data privacy and data confidentiality. These progression is allowed me now to get more and more comfortable as time's passing that, yes, I should be comfortable incorporating some of these advancements in AI within our own processes. The third item is IDP for contract reviews. As Rachel mentioned, we are on a mission here to compress our closing timeline. We started from a 30-day closing timeline to a 5-day, and we are going towards 2-day, and hopefully at some point into real-time closing. So every time where we are trying to compress it, we are understanding as a team what are the processes which is taking much more longer time, and how do we think about either transforming or automating those processes. As Rachel mentioned, one of the areas which is currently creating a lag for us in terms of a closing timeline is reviewing revenue contracts as part of our close process. Today, a revenue team member would go get the copy of the master agreement, get the copy of the quote, obtain the proof of delivery, try to read all these things to understand, are there any non-standard terms which can have accounting implications. It's all done by humans. What we are trying to incorporate is work with legal team up front, figure out a way to be from the get-go as a time of structuring itself? Can we structure the contracts in a way that we are trying to non-standardize the standard, meaning have more and more structured fields so that we have to deal with very limited unstructured fields? And for the unstructured fields, can we leverage our technology such as document understanding, which is infused by Gen AI, which can help us read these contracts, interpret these contracts, which can expedite the contract review process? So this is one area where we are not only trying to leverage Gen AI, but also with that process, figuring out a way to continue to compress our closing process. Will we get there tomorrow? Potentially not, because until we get confident that every single instant the response quality is very high quality. For me, that standard is almost 100%. We'll continue to test and incorporate this. That does not mean you don't get started with the process. The fourth item here is the future of finance, as they call it, autonomous finance. From our standpoint, this is very important. Continue to bring FP&A teams and accounting controllership teams closer so that they are integrated. FP&A is taking real-time information from actuals as they are building their forecasting. And not only that, further integrating your controls to align with that. For example, you may say that, okay, the accounting processes, let's say quote to cash process or record to report process, that operate on a weekly basis. But if your design controls are expected to operate at a monthly or a quarterly basis, then you don't have the same degree of confidence. I think what business leaders have to do is they have to take the processes, they have to understand the aspects of the processes performed by different team members, whether it's accounting, whether it's treasury, whether it's procurement, whether it's FP&A, and then understand those processes in terms of how they are structured and documented in terms of frequency and the quality, and figure out a way to integrate them and then make it more efficient. And Rachel, I know this is one area where your team is also closely working as it relates to top line. Maybe if you want to expand a little bit on that, that would be helpful.
Yeah, sure. So as I mentioned, I own all of top line reporting. So my deal desk team is in the trenches with the sales teams, working through negotiations. They're getting kind of a sneak peek at what these contracts are going to look like once they're booked. That team works closely with my RevRec team to come up with detailed kind of revenue forecasts, especially for our largest, most complex deals. Then we're in constant conversation with our FP&A team so that they're aware, hey, these large deals are in the pipeline that might look a little bit different than our standard ones. They might not fit your model. Our RevRec team has already looked at all the clauses. This is the impact they're going to have on RevRec. This is the estimate that we're going to that we should use for forecasting purposes. And so it's, while FP&A doesn't report to me, I talk to them just as often as I talk to my team members, because we're in constant conversation about some of the more significant sales contracts that will impact our quarterly reporting.
Yeah, thanks. And then the last item is, of course, we at UiPath have an advantage of having our Center of Excellence. Again, Center of Excellence is our team with folks who are more tech savvy and who have a better understanding of .NET capabilities, so they can play with the low-code technologies such as RPA or the newer technologies that are available in the marketplace. So making sure that you are aligning and working closely with the Center of Excellence so they can continue to build the process on a periodic basis. You are sitting with them, understanding and reviewing your automation opportunities pipeline, and then understanding what new automations have been deployed and what new automations will be deployed in the future period. So that rhythm on an ongoing basis is also very critical. So with that, let me turn it over to Rachel.
So we're very excited about this topic, obviously. So I think we're out of time for Q&A. Nick, I'll send it back over to you for closing.
Great. Thank you so much, Rachel and Hitesh, for such an incredible thought leadership. I also want to thank everyone else for joining us today. This session, along with all of today's content, will be available on demand following the event. As a reminder, please be sure to check out the prizes and raffle rules section to see how you can earn points for the chance to win one of several prizes. Our next session will begin at 2:05 p.m. Eastern Time, which will be a keynote presentation titled FP&A Strategies for Innovation. Please click on the join button that will appear on your screen to be redirected to the next session, and we look forward to seeing you there.
Thank you.